would like, if I may, to take you on a strange journey.
Hello, everyone, and welcome to a Friday edition of Real Estate Realities with the Rebel Broker. My name's Robert Whitelaw, and I am the Rebel Broker. Licensed real estate broker in the state of California. Member of the National Association of Realtors. But please, don't hold that against me. Welcome to it, folks. Another week is in the can. I hope it has been very productive for everyone. We are oh so very close. Yes, we are. To choosing our winner for this first drawing. We're going to go ahead and do it on Monday. Oh, what drawing, you say? Well, let me tell you all about it. If you head on over to therebelbroker.com and go to the top of the page, there's a little red button. It says, take the survey to support the show. At the first screen that you arrive at, go ahead and provide your email address and your name. Click the continue to the survey button. Take the survey. Use the same email address that you used at the first screen, and you are officially entered to possibly win a $50 gift certificate for Amazon. So there you go. That's all you need to know to potentially get yourself $50 in your digital pocket. So feel free to head on over to therebelbroker.com right now to do that. And then on Monday, I will announce the winner. The absolute cutoff time for entry to be considered will be, 2 o'clock Pacific time on Sunday will be the cutoff time. So if you want to get considered for that very first drawing, please make sure to have yourself all submitted by then. And then we will do this again November 1st, or at least the very first show of November. So you get two chances. And we may even continue this on. We may even keep going. So go ahead and enter. If you already have entered, you're fine. As long as you provided an email address when you entered, you are good to go. If you did enter previously, before I started the $50 motivational portion of this little survey, please do it again and provide your email address so that you'll be included, because obviously there's no way for me to give you the money if I don't have an email address. So I will be, as I said, announcing. I don't know how to announce who the winner is. Maybe I'll see if there's a first name associated with it. Great. But I will reach out via email to whoever wins to let you know. So get it going now, and you are all set to go. You can also, at therebelbroker.com, click on Contact Rebel Broker and send me any ideas, suggestions, observations, or questions that you might have, and I would be happy to reply. And finally, if you'd like to become a member of the Insiders Club, I guess is what we're coming down on calling it. This is for folks who will get a newsletter from time to time with updates, information, stories that I'm covering outside of the show, those types of things, plus insights into what's coming. You'll know first what kinds of additional things I'm going to be offering outside of the show specifically. Any content that I come up with, you guys will get first crack at it. I'll usually just send it out to the folks on that list. And I'm also hoping to make it more of a give and take where I can offer up ideas for future things to do, whether that means online seminars or online courses or content or different things to do in different mediums. So maybe not just on the podcast, but maybe then also do something on YouTube that's a little bit more visual. So different things I come up with, ideas I come up with, and then getting ideas from you on different things that you'd like me to cover on the show. So those folks will obviously sort of be on the cutting edge of what's happening here relating to real estate reality. So feel free to join that group by texting the word Rebel Broker, all one word, to the number 44222. That's text the word Rebel Broker to 44222. Follow the prompts. Provide your email address when prompted, and you will be in, and you'll be all set. Easy as pie. Okay, folks, we have gotten another interesting list provided to us by the folks over at hsh.com and marketwatch.com. And it breaks down to giving us the top 10 most affordable metros. And as usual, I always like to try to take these kinds because these usually represent opportunities, right? These are areas that are obviously going to have a little bit broader appeals because they're metro areas. So it helps us focus in on some of the more affordable places to focus your attention. But then in addition to that, what we'll do is take a really quick look at some of the market indicators in those metros to see if they might just be the perfect place for you to jump into becoming a real estate investor, or maybe to find the next property. Maybe you've got a dozen and you're just looking for the next place, the next great opportunity community, and this could be it for you. Or maybe you're looking to relocate in general. You want to really get yourself into a position where your housing costs aren't as big a chunk of your life as they may be now. I know if you live here in Silicon Valley, it sure would be nice to not have your rent or your house payment be 50% of your income. And so these communities might represent a great change for you, depending on what kind of job you do. And there are several on this list that absolutely cater to Silicon Valley type folks in terms of high-tech type of things potentially being available for you. At least a few of them sound familiar as locations for people to go for those kinds of jobs. We'll go ahead and start with number 10, which is Orlando, Florida. According to this survey information provided here, we're seeing a monthly cost of home ownership of $1,152 with a minimum salary needed of $49,382. And if we look at the Orlando market, this time we'll be using Trulia to help us get some insights. The median home sales price in Orlando is $201,175. Median rent per month is $1,550. And the trends actually look pretty good in general. If you're looking at what median sales price is, back in September, it was right around $180,000. So it's actually been doing a pretty steady increase. And the median rent per month has also gone up. Back in September, it was right around $1,400, and now it's up to about $1,550. So that's kind of an interesting rate of growth. Let's see, is there anything else here in terms of sexiness? Now, another number that's nice to know about different communities is the percentage of homeowners. 56% of folks in Orlando own their home, and that gives you a pretty healthy chunk of the community that's going to need rental homes being made available to them. So this could represent a good opportunity for someone who wants to jump in and take advantage of a marketplace that looks like it's growing. According to, again, Trulia Market Trends help you understand the movement of key price indicators. Trends in Orlando show a 12% year-over-year rise in median sales price and a 0% rise in median rent per month. So in general, what we're seeing is steady rental income. I would have liked to see a little bit of an increase in that when we see a 12% year-over-year rise. But again, if you're doing this as an investment, this is strictly a math question, right? If you go in there, you plug in the numbers, you get a little ground truth and figure out areas that make sense to you. It's really just a question of figuring out your costs and what it costs to get into it, and then what you're going to generate in profits in terms of rental, and then calculating what you're willing to put up with in terms of a certain level of profit. And if those numbers don't jive, then don't do it. Of course, if you're looking to move to a community like this, it's a little bit more of an emotional thing. You're going to want to move someplace where you like living. And so there's going to be different costs considered in your mind that may not always come down to a simple math question. So it's going to be up to you to decide what makes sense on that front. Let's check out in on the next one. Number 9 is San Antonio. The monthly cost of home ownership there is $1,138. The minimum salary needed to be a home purchaser is $48,753. If we take a look now at what the market is doing in San Antonio, the average listing price, because remember, Texas is another one of those states where getting average sales price becomes difficult because that's not public information, apparently. So when someone sells their home, it doesn't automatically get entered into the multiple listing service. So we have to go with listing price. But $266,408 is the average listing price. I bet you can count on being able to probably purchase on average a little bit below list price. But again, you'll have to get ground truth to figure out if that's really the case. Right now, there are 4,233 homes for sale in San Antonio, and the median rent per month in San Antonio is $1,395. When I do a quick survey of the homes that are currently on the market, I see a lot of options scattered throughout the city. You'd want to get an idea of where the optimal rental areas are in terms of just attractiveness, but literally spread out all over the city. I'm seeing an awful lot of homes listed for sale. Let's see. It seems like a lot of the homes, that are centrally located. And I see a huge range, $287,000 for a 3-bed. $875,000 for a 3-bed, $140,000 for a 4-bed. These are all relatively central San Antonio that I'm looking at right now, right near the 10 and the 35. So obviously these tend to be right there in downtown, but a lot of different variety in terms of prices and availability, and rents seem to fall right into that range that we were seeing of $1,300, depending on the property and the location. Obviously, I'm seeing quite a bit of variation from neighborhood to neighborhood. So it strikes me as San Antonio, maybe one of those areas like we've talked about, the communities that I have here in my local area, where it can be very different just from neighborhood to neighborhood. So being able to get in there, spot those neighborhoods that are a little bit more desirable, where folks are a little bit more drawn in terms of wanting to rent. It looks like you could absolutely have a variety of options here if that's a city that looks exciting to you. All right, moving to number 8 on our list is Tampa, Florida. Monthly cost of home ownership is $1,047. Minimum salary needed for a purchase is $44,875. If you're keeping track, you may notice that's the second time we've had a Florida city pop up on our list. Something else interesting to point out is on many of our other lists that we've talked about in terms of rate of return, in terms of good investment opportunities, these Florida cities have popped up on lots of those lists. So it seems like, and one of the things we also noticed about Florida is it's one of those cities that went through its foreclosure inventory a lot later than others because it's a judicial state, meaning the courts have to manage the process, which slowed it down dramatically. So trends like this sort of give me the impression that you just see it lagging just a little bit behind some of the bigger pushes in real estate that we've seen in other places across the country. Now, the median price is a little bit lower than the last city we looked at. It's at $210,000. And of course, remember, this is the actual sales price. The last city we looked at was San Antonio, and they don't release actual sold prices. They do list prices. The median rent is $1,450, which on average is a little bit higher than we saw in San Antonio. So the combination is nice, right? We're seeing a slightly lower cost of acquisition, and we're seeing a little bit of a higher potential return on investment in terms of rent. Tampa median sales price is actually looking healthy compared to past performance over the past year, going back to September, where we saw it around $190K for the average price, and then now we're seeing it at, what was the number, $210,000. Median rent per month has also moved up at a relatively healthy clip. It actually saw a little bit of a dip. It went from $1,350 down to about $1,250 from September to November of last year, and then it sort of took its nice little rise right up to $1,450 for the month of September of this year. So all in all, that actually looks pretty good. I've mentioned this before. I like Tampa. Tampa is a city I lived in for a while, more closer to Clearwater. I lived just off the Courtney Campbell Causeway on the Tampa end, and I liked the town. I thought it was a relatively nice family town. And if I wasn't on the opposite side of the country, I think it would absolutely be a town that I wouldn't hesitate to take a look at and see if it didn't have any opportunities. All right, let's go ahead and jump on to the next one on our list. Next at number 7, Phoenix, Arizona. Monthly cost of home ownership is $1,043. Minimum salary required is $44,716. Now, like some of the other cities on this list, I haven't been to every one of these cities. Tampa, I've been to. I get what some of the draw is for Tampa. Phoenix is another city I've been to before, and it has a lot of sub markets within the city, within Phoenix. You've got all of these different areas that sort of surround it. It's absolutely a sprawling metro area that attracts a lot of different folks for a lot of different reasons. You've got Scottsdale, Phoenix, Glendale, Peoria, Mesa, Tempe, Scottsdale. I think I mentioned Scottsdale, Goodyear, Chandler. This is really one continuous, just paved area of metropolitan sprawl, really, and it represents an awful lot of different opportunities. So while we're going to give general numbers here, I think that Phoenix has always represented a relatively decent potential for someone to invest in. I've never been a huge guy for Phoenix just because of how hot it gets there. So, you know, you could go to different areas. You can hug some of these areas where the home prices are a little bit higher, a little bit more desirable. Once you get up to Paradise Valley and Scottsdale, there are some areas there where the prices really start to get up there, nudging up closer to the $1 million mark in some cases. But again, there's plenty of opportunities down there at the more affordable end. And I'm all about barriers to entry, right? And that being acquisition price. So if you can get in there and you can get a good property in a desirable area or even just a relatively neutral area, that's a great opportunity for you because those are going to be the areas where a lot of folks are going to be looking to rent. Now, the median sales price in Phoenix is $209,275. As I mentioned, that median price is going to be something that is interesting to note, but you're going to see a wide variety. In fact, this probably is one of those cities where it makes sense to do a really quick check on what homes are currently selling for in that area, and we'll do that in a second. The other number to get, obviously, is median rent per month, which is $1,350. Phoenix has been a little bit more interesting in terms of price. Now, in September, we saw a home price of $195 in terms of a median sales price, which actually declined. It went down a little bit leading up into December, went up a little bit in January, went down again a little bit in March and April, and then sort of took a rise, and now it's at $210. So, and that range of flex in terms of change of price ranged from a low of $185,000 over the last year and a high of $210,000. And you know what? That's not that bad. That's not a huge range or a huge level of fluctuation. So that's actually fairly reasonable. Rents stayed, according to this, and these numbers seem a little odd to me, stayed completely flat from September to January at $1,200. And then they were ramping up to a high of $1,350, which is where we are now. Now, if we go ahead and jump in and take a look at Phoenix, and just to get an idea really of what kind of properties or what kind of price ranges we can see, let's take a look at that for real quick. Now, just for the purposes of calibrating you to what I'm looking at here, I've sort of zoomed in on Phoenix, and I'm looking at the northeastern chunk of the wedge created by the 17 freeway and the 10. That includes areas like the Steele Indian School Park, Phoenix Country Club, Monterey Park, just to sort of give you an idea of what I'm zoomed in. And with central Phoenix sort of at the north, and Mariposa Street is up there as well, just so you can kind of get an idea if you wanted to zoom in and do the same thing. Now, I've gone ahead and limited myself to just homes for sale with 3 bedrooms or more, and I'm looking across here and seeing what my options are in terms of what's in there, right? If I want to go with that rule of 3 beds or more are better, what can I find? So I'm seeing properties here listed for $155,000, 3 bedroom, 2 bath, 1,200 square feet. I'm seeing $234,000, 3 bed, 2 bath, 1,431 square feet. I'm seeing $78,000 for a 4 bed, 2 bath in the extreme west end of that, really close to the 17. So a really good variety. And I like the fact that I'm seeing that. I'm seeing stuff that's over close to $1 million. I'm seeing a $1.5 million home, 4 bed, 6 bath with 5,192 square feet. What else? 184,000, 3 bedroom, 1 bath. Kind of interesting they would have 1 bath. That's normally one that I wouldn't want to jump on. With a 3 bedroom, you're always wanting to get at least 1.5 baths. So a lot of variety there, a lot of opportunities in terms of price ranges, right? Because remember, it's all about those barriers to entry. And then if we are focused in on the exact same area and we're just looking at rentals, I'm seeing in the same area where that other inexpensive unit was close to the 17, I'm seeing $650 for a 2-bedroom, 1-bath. Excuse me. So that represents a lower price than you'd probably be able to get for that 3-bedroom. Studios for $525 in the same area. $2,200 for a 3-bedroom, 3-bath with 2,400 square feet just off of the Encanto Park area. $2,900 off really in the same general area. 3 bedrooms, 3 baths. $1,800 for a 2-bedroom, 1-bath. So very interesting overlaps here in terms of different amounts that would be charged for rent and price levels that I think reflect a potentially interesting opportunity for someone who might be looking into the opportunities of getting something rented here. All right, let's go ahead and move on to the next one. That was Phoenix. We're going to go ahead and do Atlanta next. But before we do that, we're going to take a quick break. So don't go away. We'll be right back.
Are you ready to jump in and start your search for your first investment property? Maybe you've decided that it's time to own your own home, or maybe you're ready to sell your home and move on to something new. No matter what your goal is, the Rebel Broker can help. That's right, aside from hosting this show, I am also the owner broker of Whitelaw & Sons Real Estate Services right here in Silicon Valley. With over 25 years experience serving Silicon Valley, Morgan Hill, San Martin, and Gilroy, I or one of my great agents can help you achieve your goals in real estate. So if you're ready to look into taking that next step towards achieving your real estate goals, point your browser at www.soldbyrobert.com. That's www.soldbyrobert.com and get in touch. Let me show you how I will earn your business and your respect. Again, that's www.soldbyrobert.com, or you can call me at 408-852-0525. California Bureau of Real Estate ID 00984-909.
Welcome back, everyone. We're running down our list of the most affordable metro areas and trying to put a little bit of a, is it a good investment spin on it by sharing some insights like average price, rental prices, those types of things. And one of those cities that frequently comes up on opportunity lists, and I like to cover these lists that approach this from various angles, whether it's return on investment or just whatever aspect it might be, opportunities to acquire, low barriers to entry, whatever the cool investment angle is, we like to try to cover it here. And on those lists, frequently, Atlanta has shown up. And what's interesting about Atlanta is I have had very diverse opinions offered to me about the market in Atlanta. And I'll be honest, I am not an Atlanta stud when it comes to knowing the market in Atlanta. I know there have been several of those home shows that have been hosted in Atlanta or the greater Atlanta area where they're doing flipping and other types of stuff. But I have people who will contact me with very passionate opinions about whether or not Atlanta makes a lot of sense to invest in. I've also had several very interesting opinions about cities like Philadelphia, which I've also had a little experience with, and I had the most insane cab ride of my life in Philadelphia. However, I thought it might be interesting to take a quick jump to what Forbes had to say about Atlanta. Now, this is an article that I came across in Forbes. It was earlier this year. When was this one? July 13th of 2016. I don't think we ended up discussing it on the show. But I thought it was interesting, and it caught my eye because I've had so many of you offer either just, you don't want to do Atlanta. Atlanta is not on the upswing, and the numbers don't tend to support that. If you just look at it from a numbers standpoint, Atlanta actually seems to be going in the right direction. And of course, just like any other city, if you're like we always say, if you're not chasing down the ground truth, you're going to get stung, and that's going to happen. You can have that happen to you anywhere, so you need to be careful where you're going. But I'll just give you really the quick hit, and this is what's offered by this article that came to us from Forbes. Quote: if you're planning to buy a home, do it now. Now, this was this year. This was July of this year. Because prices are going to go up for the next few years, according to this particular guy. Investments in single-family rental properties have good potential, especially in Clayton County. Apartment developments have the best potential in Gwinnett County, where splitting homes into rental units is also attractive. And that's a great one. I mean, we've talked about this in relation to other cities, and it can be a lot of people don't get how that's not a universal thing. Being able to split homes into multiple rental units, not a thing in a lot of places, or a very difficult thing to get done in other places. Out here, you rarely. I'm not sure I've ever seen it unless you've specifically built a home to be a duplex. You're not going to be splitting your house up to turn it into multiple rental units. With a few exceptions, I've seen downtown where some older style homes have been chopped up into rooms for rent. Mortgages and construction loans have lower risk in Forsyth County, where demand will be strong. Best bets for investments in retail are Forsyth and Cherokee counties. Worst bets are Gwinnett and Clayton. So they kind of breaks it down right there, and I thought that was interesting. If we look at Atlanta, the month, and what's interesting is it's number 6 on our list in terms of the most affordable metro areas. So it's blending a lot of the things that sure does make it sound sexy. Low barriers to entry. Low minimum salary required, which indicates obviously that's also implied low barrier to entry. Monthly cost of home ownership is $935 a month. Minimum salary needed according to our metro list is $40,292. If we go ahead and take a look at Atlanta, Georgia averages, according to Trulia, the median sales price is $277,100. Remember, that's not average. That's not. Well, it is. I'm sorry. It is sales price. So that's a good number to have. A lot of states don't allow you to reveal the numbers, as we talked about with Texas. But here we go. $277,100 in sales price, $1,450 median rent per month. And in terms of the trends, a lot more flexibility in terms of movement, but again, within a relatively sharp range. So back in September, average or median sales price was $265,000. That actually dropped from September to December, went up a little bit in February, and then dropped again down to in May, where it dropped down to $240,000. So $25,000 drop, and then it went back up, and now we're back up to $265,000. So we've ended, if you go from September of this year to September of last year, zero change in sales price, where you had kind of an interesting dip between those two things, with it peaking at $270,000 back in August. So that's actually kind of cool. You can almost call that a stable thing, right? However, price per square foot, which is an interesting number, has tended to remain a little bit more steady. It did stay in line with that, but this is the average price per square foot versus the median price. So that's a little bit more indicative, really, of what that price was doing. So that started out at $184 per square foot in September of last year, and it's at $191 per square foot in terms of September of this year. Median rent per month, again, relatively flat at about $1,200, and then peaking now at $1,450. It reached its peak last month at $5 more, $1,495. So the long and the short is the numbers actually look pretty good. If we look into some specifics, lots of properties available. And if I just sort of zoom right into downtown, sort of around the Georgia Institute of Technology is kind of where I'm focusing a little bit, because that's just where I'm naturally drawn to university type stuff. Maybe it would be even smarter to go with Clark Atlanta University or Morehouse College. I'm seeing those down. Yeah, let's do that instead. Let's go ahead and jump down to that area and see what kind of opportunities. Here's the Atlanta University Center. So let's see what we've got here. So now this is homes for rent. Seeing a 4-bedroom, 2-bath, $1,100. I'm seeing a 1-bed, 1-bath for $415. Seeing a 2-bed, 1-bath for $725. I'm seeing a 2-bed, 1-bath for $935. Let's go ahead and switch this over to buy. And we're in now the exact same area. And let's see what we've got. $125,000. This is absolutely not correct. There's no way. 6-bedroom, 2-bath in the exact same area in the Atlanta University Center. I have a very hard time believing this is a 6-bed, 2-bath for $125,000. For $165,000, I'm seeing a studio, which is literally about 5 blocks away from that building. $165,000 for a studio. I'm seeing $165,000 for a 3-bed, 3-bath in the same general area. So a lot of variation here. And then just on the other side of North Side Drive, so just a little bit east of those, another one for $110,000. That's another studio. 2-bed, 2-bath for $140,000. And just to be clear, I've always said go with the 3 bedrooms. Yeah, that's true. But you know what? 2 bedrooms are just as viable in very college student centered areas. So and you don't have to, I don't think Atlanta is one of those cities where you have to do the college thing if you need to focus on that. If you want to, that usually represents a relatively steady stream of income for you, but then you're also going to be having to deal with being a landlord in a slightly more mobile environment. There's a good chance that your renters might want to bail during the summer months. So these are all things you're going to want to contend with. And if you'd rather avoid that, you can sort of but you still want to have the potential to take advantage of it. You'll want to go ahead and get properties that are perhaps not right there, just a walking distance to educational institutions, but maybe midway between there and a downtown area or a higher employment area where a lot of folks are going for work every day. But I'm seeing a really good variety in prices here. Are we looking at... Yeah, these are all homes for sale. Let's go just with 3 beds and see what we see in Atlanta when we're looking for that. Again, some pretty good opportunities. And at prices, the barrier to entry is so low here. 3 bed, 1 bath, which is a foreclosure, is the foreclosure price is estimated at $54,000. So I'm not sure that's one we're going to want to jump into here. Here's a 3 bed, 1 bath for $80,000. Here is a 3 bed, 3 bath for $165,000. That's one we actually looked at a minute ago. So I'm kind of surprised actually to see these kinds of opportunities at these price points. 3 bed, 2 bath, $62,000, 1,000 square feet, over by Washington Park, which is just west of the Atlanta University Center area. So lots of interesting opportunities there. I think Atlanta could be fun for folks. And sadly, all I've really ever done is had layovers in Atlanta. I did have to stay there for a couple of days once, and the only interesting fact that was shared with me by the person I was with in the city who lived there and was driving me from point A to point B was that it had the highest number of strip clubs per capita. Not sure if that's still true. This was an early 90s trip, so that's as recent as my information is, so I apologize for that. All right, let's go ahead and jump back into our list. We're halfway through. Number 5 is Detroit. Again, we've had lots of conversations about Detroit. One of those ones where you'd want to get an awful lot of ground truth before you made any commitments. Monthly cost of home ownership is $899. Minimum salary required is $38,542. And I'll tell you what, once you start seeing what the numbers are, it's a mind blower. So median sales price in Detroit, $36,750. The last new car I purchased was more than that. Median rent per month, $750. Now, if you do a quick survey of the market, it is brutal. What's really interesting is just the variety and the areas that are more lucrative than others start to become really obvious really fast. Out on the outskirts of town, I'm seeing $52,000, $27,000, $28,000, $10,000, $45,000 for these different properties. And this is for a 4-bed, 2-bath home for $45,000. Again, I'm only seeing 3-bedroom homes. These is in terms of just grouping, and some of them are just entire neighborhoods. So clearly, just by looking at this data online, you can see areas that are ridiculously impacted. It seems like the area that's going to give you... So what I'm saying here is you've got a ton of real estate that's hovering way down at the low end and a ton of real estate that's hovering way over at the higher end. And finding something sort of straddling that point is going to be a little bit more of a challenge. But the areas you want to focus your attention become kind of clear as you're looking at these numbers here. Now, down closer to Belle Isle Park looks like where you're kind of wanting to shift your gaze in terms of potentially investing. I'm seeing a 3-bedroom, 3-bath that is near... What is that? I don't know anything about Detroit. I hate to admit it. But you can see the downtown area. The downtown of Detroit is very clearly marked. You're starting to see property values a little bit higher there. 3-bedroom, 2-bath, 1,400 square foot property for $337,000. But as you move out just a little bit, $175,000 for a 4-bedroom, 3.5-bath, just up Lafayette Street, closer to Elwood Cemetery. $38,000 for a 3-bed, 2-bath, just north of that in the Eastern Market area. That may be the beginning of a less lucrative area. But if this was a heat map of prices, I got to think you'd just see dramatically crazy red the further you get out from downtown. Once you get past what looks like Etzel Ford Freeway, going that direction, that's when prices just seem to really drop through the floor. So if you can get some ground truth, and we've talked about this before, that's the number one thing you'd need in a challenged market like this. I think that Detroit will recover to a certain degree. I think it still has an awful lot of excess housing that it just can't get occupied, that isn't going to be a high demand for. But I think it sort of has this core that could potentially be a good investment. And if you're close enough to that core without spending the highest amount of money, because once you get into the real core here, let me get back to where I was. You start seeing $950,000 homes for 3 bedrooms, $295,000, $337,000. So, that's obviously an area that reflects a higher level of desirability based on the prices that you're seeing. But there's absolutely areas sort of sprinkled in there that represent a better deal, $199,000 on the same street as these $425,000 and $337,000 homes. With a 3-bed, 2-bath, 1,600 square feet. So, again, I think it represents an opportunity, but it also represents a challenge in terms of understanding what the realities of the local marketplace are. And whether or not you have faith in whether or not Detroit is going to be a city that can really recover, that can move forward from a really bad real estate market. Let's see what we've got here. Now, in terms of trends, not seeing a lot of stuff here that convinces me. It tells me we're in a down time. Trends in Detroit show a negative 16% year-over-year drop in median sales price and a 0% rise in median rent per month. What's very interesting is there was a $25 blip in rent prices from March to July, and it just kind of came and then it went. So this is one of those deals where this is going to be somebody who's really wanting to sort of take that risk or sort of roll the dice. And when Detroit pulls itself out, that's clearly going to be a big payoff for somebody who's managed to purchase wisely in the city of Detroit. Okay, let's go ahead and move on. Next, number 4 on our list is St. Louis. Monthly cost of home ownership in St. Louis is $890. Minimum salary needed is $38,131. Unfortunately, Trulia has not given us any median sales price data. I'm not sure why that is. It might be one of those places where you just can't get that data. But median price is being listed as $600 per month. Median sales price isn't listed, as I mentioned, but it also does show that median rent per month has actually decreased. Trends in St. Louis show a 4% week-over-week rise in average listing price and a negative 2% drop in median rent per month. I don't know how they're coming up with that 4% because they're not actually showing any list prices here on their website. Since it really didn't give us any average sales price data, I'm taking a look at St. Louis, and I'm actually seeing a pretty good level of variability. Again, I've done a search for only 3-bedroom or more homes. I see near Forest Park and 350,000, 599,000, 1.5 million, 295,000. But then I also see opportunities for homes at 38,000, 110,000, 65,000. 25,000, 61,000 up near, what is that? A big green area, which is Belafonte Cemetery and Calvary Cemetery. The neighborhood right wedged in there shows a lot of different opportunities. I'm not sure about that neighborhood, but I'm seeing it sprinkled out all across town in terms of various opportunities that are going to offer you for 3-bedroom homes. 215,000, 169,000 as you get closer to Tower Grove Park. 142,000, 130,000, 280,000, 115,000. So a lot of different areas here that represent a pretty good spectrum of price ranges for anyone who's looking for something to fit that budget that will potentially also get them the rental income that they're looking for. If I look at the exact same area around Tower Grove in terms of rentals, I'm seeing $900, $1,100 for a 2-bedroom, 1-bath, 2-bedroom, 1-bath for $900. $950 for a 1-bedroom, 1-bath. So right around anywhere from the $900 to $1,200 or $1,100 range. And given the prices, those all seem like a pretty reasonable math problem for folks to come up with a positive cash flow proposition for the city of St. Louis. If we go to number 3 on our list, Cincinnati, monthly cost of home ownership is $868 per month. Minimum salary needed is $37,179. According to the numbers on Trulia for Cincinnati, the math sounds great. $145,000 is the median sales price, with median rent, excuse me, at $1,100. That could represent some very interesting opportunities. Cincinnati is showing a 7% year-over-year rise in median sales price with stable rentals. Although they did see a little bit of a boost here. We saw in September rents were $955, and then September it's $1,100. So statistically, they're not showing a very significant increase, but it's showing an increase. So I think that's something that could potentially reflect a good return on investment, particularly with that low obstacle to getting into the marketplace in terms of acquisition price. If we go to let's see, we just did Cincinnati. Next on the list, number 2, Cleveland, Ohio. Monthly cost of home ownership, $803. Minimum salary needed is $34,434. When we look at what Zillow has to say about it, the average price that they're indicating here is $52,800. The median home value in Cleveland is $52,800. Home values have gone up 1.7% over the past year, and Zillow predicts they will rise 1.7% again within the next year. Median list price per square foot in Cleveland is $50, which is lower than the Cleveland metro average of $93. The median price of homes currently listed in Cleveland is $60,000. Let's see here. So going all the way back to 2007, they took a pretty gradual decline all the way to about 2011, 2012, when things really flattened, and now things are starting to uptick a little bit. So I like these numbers. I think these are relatively attractive. I like that they're nowhere near where they were at their peak, and those are things I like to focus on. They do indicate that right now it's a seller's market. But it sounds to me like you're going to be able to find some excellent opportunities at $52,800 for an average acquisition price. I think the math could clearly work in a city like Cleveland. Number 1 on our list. And I think it's also interesting that number 2 and number 3 were both in Ohio on our list. Just because that's anytime you see a state taking such a prominent position in a list like this is kind of an interesting thing to ponder a little bit. Next on our list is Pittsburgh, number 1. Monthly cost of home ownership is $756 a month. Minimum salary required $32,390. Now, Pittsburgh is interesting. It's an interesting blend. It's a little bit higher in terms of barriers to acquisition. They're showing the average price of $114,600, and that's an 11.9% increase over 1 year. And Zillow is anticipating a slowdown in that increase over the next year, down to 5%. But I think that's interesting. I think that while the cost of acquisition may be a little bit more for some folks, the idea that you're going to see more appreciation, or at least have a higher probability of appreciation over the next year, I think is interesting. It's something where when you work out the numbers and maybe forecast where things are going to go, it may represent a better long-term investment simply because you're likely to see that your investment grows a little bit better. According to this narrative here, they've got the median home value in Pittsburgh is $114,600. Home values have gone up 11.9% over the past year, and Zillow predicts they will rise 5% within the next year. Median list price per square foot in Pittsburgh is $114, which is higher than the Pittsburgh metro area of $107. Median price of homes currently listed in Pittsburgh is $179,250. The median rent price in Pittsburgh, $1,300, which is higher than the Pittsburgh metro median of $1,200. And when we look at performance numbers, it's not as sexy as what we were seeing in Cleveland. We're seeing 207 in 2007. We were seeing $76,700 being sort of the home value index from Zillow, and that's the low point going back to 2007. It has been steadily increasing, and so from now going all the way back to 2007, we're seeing that we're at the highest point. We're at this about $115,000 price point. And you're buying on a high. So you have to have some faith that this projection of continued growth of 5% actually makes sense, and that it's actually something you can more bank a little bit more on happening. In terms of a little bit more security with your investment, I'm actually a little bit more drawn towards Cleveland than I am towards Pittsburgh. But of course, it depends on you. These are all, I think, excellent opportunities depending on your willingness to accept certain levels of risk, and also your ability to go into these areas and really dig up the ground truth and figure out where the most lucrative areas are. And remember, we've talked about this in previous shows in terms of finding areas that are in growth mode and how to identify them. Remember, we talked about where the artist community is tending to go now, where you're starting to see new businesses opening in various areas. And those can be difficult to spot sometimes. But if you can get into that groove in these new marketplaces, you could really find yourself with an excellent combination of finding already an area that's has a low barrier to entry, but then also within that community, find an area that's about to take off and give yourself the maximum level of return for your investment. Or lifestyle. If you're not here because you want to invest, you're here because you just want to find the best places to live and you want to do it without breaking your back financially, these are all great options for you. All right, folks, once again, I absolutely appreciate you spending just a little bit of your day with me Monday through Friday. I consider that a valuable gift that you give to me. Thank you very much for that. And also, thanks for listening. Have a fantastic weekend. And I'll talk to you all on Monday, where I will be giving one of you lucky folks who've taken the survey $50 to spend at Amazon. Thank you very much, folks. Talk to you later.